Welcome to this step-by-step tutorial on how to configure temporary differences in Oracle Tax Reporting Cloud. During system setup, implementation, or as part of your ongoing tax reporting, you'll add and configure accounts for temporary differences. Temporary differences include all differences between the tax and financial reporting bases of assets and liabilities, if those differences will result in taxable or deductible amounts in future years. Common timing differences include those relating to depreciation methods, deferred compensation plans, contracts, bad debts, and so on. These amounts are stored in members of the account dimension under TRCS Temp GS Total or TRCS Temp ST Total. When reconciling temporary differences at the national level, note that differences can exist when you reconcile from a reporting standard to a statutory standard, or when you reconcile from the statutory standard to a tax reporting standard. For example, say your reporting standard is IFRS, and the tax return basis in the UK is UK GAAP. Temporary differences are entered in accounts under the GAAP to Stat parent. When you reconcile from UK GAAP to taxable income, temporary differences are entered under the Stat to Tax parent. In this sample application, you can see the temporary differences already defined. I'll add a national temporary difference for warranty costs. I'll add it under Temporary Differences, Stat to Tax. Note that you can place these accounts in hierarchies. They don't have to exist in a flat structure under a parent. I've located the Temporary Differences Stat to Tax parent member, so now I can add the new temporary difference account. I'll enter the name and alias. For account type and time balance, best practice is to select Asset and Flow, respectively. For data storage, best practice is to use Store or Never Share. Use the Dynamic Calc setting for any parent members added. For plan type, ensure Consol is selected. It's important to note that for optimal performance, these new accounts should be excluded from the Rates plan type. I'll open the Attribute Values tab to assign attributes to this account. These attributes apply only to base accounts. For tax type, I'll select National, although I could select National and Regional if this temporary difference is also applicable to the regional tax calculation. This attribute is required for temporary differences, so you must choose one. Tax data type identifies whether the amount entered is pre-tax, tax-affected, or apportioned. Again, the attribute is required, so you must make a selection. Note that the Consolidated ETR attribute doesn't apply to temporary differences. The Rate Change to Equity attribute categorizes any amounts that arise from tax rate changes to equity instead of deferred tax expense. The last attribute to note is Equity Reversal Target Account. This attribute applies to equity temporary differences. Use this attribute when you don't want to record any current tax expense on this account. In the current provision, the temporary difference is tax affected as part of the current tax per return, and then below this calculation, the tax effect is reversed as an additional provision item. You add reversal accounts as base members under TRCS_Equity Reversal Total. When finished, save your changes. I'll add a regional temporary difference now. I'll search for the Total Regional Temporary Differences account and add a child below it. I'll enter a name and alias and make the same selections as I did for the National Temporary Difference account. I'll assign attributes as well. For tax type, I'll select Regional. Tax data type is the same here as it was for National, except Apportioned is an option for a regional temporary difference. FBOS, Federal Benefit of State, defaults to Yes. This attribute signifies that the impact of the regional temporary difference in the regional tax calculation gets a federal or national benefit if this is an entity where the region is deductible on the national level. For example, in the U.S., state tax is deductible at the national level. In the application, an entity can be set up to deduct regional on the national. This attribute applies only to regional temporary differences and can be changed to no. The Equity Reversal Target Account attribute also applies to regional temporary differences. When you've finished, refresh the database to incorporate all updates. Upon refresh, the temporary differences are displayed in the current provision, national, and regional. I'll check the current provision to see the new account. I can see the account has been added. I'll open the current provision regional form to see the new regional temporary difference. If you have many temporary difference accounts to add, you can import them or use SmartView. Once temporary difference accounts are configured, you can manually enter adjustments or use tax automation to populate the accounts. In this tutorial, you learned how to configure temporary differences in Oracle Tax Reporting Cloud. To learn more, visit cloud.oracle.com.